100 years ago of gold or an ounce today or an ounce 100 years from now is still just an ounce of gold. It doesn't change at all. The only thing that changes is the measuring stick, and that measuring stick are currencies. And currencies worldwide are going down because gold has broken a new highs in all currencies. Matter of fact, the dollar from 30.
Goldman, Financial Times, I think today, on the 2nd or the 3rd today, they published something from Goldman's desk. And Goldman says, hey, clearly there's a lot of unreported buying. So while the World Gold Council show that acceleration of demand, they then show a red dotted line that says, oh no, there's a hell of a lot of unreported gold. And essentially then we speak to our liquidity providers, who one of them is a Goldman guy, and he says, oh no, it looks like, what they're saying is officially, it looks like unreported is probably around about 33,000 tons. But he said, more realistically, we think it's 42,000 tons. So, so much is going on under the radar here. And that's probably because a lot of, when you think about the gold that's flowing into China, gold and silver flowing into China, it goes through 42 customs districts, which have 680 individual customs offices. There's so much fiddle room here. It's unbelievable. And of course, we've known for years, people look the other way. It's probably very likely, and the feedback we get, this is military. This is to stock up military critical assets. Gold and silver are critical minerals.
In today's report, financial warning lights are flashing across the global economy. Market experts, Bill Holter and Andrew Maguire, are sounding the alarm on an imminent banking and currency crisis, one that could rewrite everything we know about money, debt, and wealth protection. From the collapse of commercial real estate to record sovereign debt, from AI, job losses to gold and silver surging against weakening currencies, this may be the turning point investors have feared, and the opportunity others have been quietly preparing for. Before we dive in, make sure to subscribe and turn on notifications, because what happens next in global markets could define your financial future. As millions continue to work from home, commercial real estate is collapsing. Empty office towers are crushing landlords, and rising interest rates are driving defaults. Banks tied to these properties are now exposed, setting the stage for what some are calling a slow-motion credit crisis. Meanwhile, artificial intelligence is transforming industries, and not always for the better. As automation accelerates, layoffs are spreading far beyond tech. Journalists, fast food workers, and even analysts themselves are being replaced by algorithms. The result, a weakening consumer base and growing inequality. Just as the U.S. national debt surpasses $36 trillion, with interest payments alone nearing $1.8 trillion a year. This is unsustainable, and experts warn it's no longer a question of if the system breaks, but when. Now let's show you clips of the latest interview, but before we start, please subscribe to the channel and leave a comment. We read everyone. Thank you, and let's dive in.
For years, I thought that silver would be the fuse on gold, and it's looking pretty squeezy right now. When I say squeezy, from the short squeeze standpoint, we've been in a supply deficit for 5 years, and that's only broadening. It's not coming back to balance. And the only thing really that can balance the supply deficit out are higher prices. Now, the problem in the metals industry is that the supply chain is relatively inelastic time-wise to price. You could discover gold or discover silver today, hit the mother lode, but you won't be in production for 7, 8, 10 years, just because you've got to build out the infrastructure. You've got to get all the permitting. et cetera, et cetera. So it's an unusual market compared to, say soybeans or whatever. You just plant more for that year to make up for a deficit. You can't do that with silver. And I think ultimately, silver is going to fail to deliver. In my eyes, that's within the next few delivery periods. So I think before year end, you're going to see the silver market break. That will immediately spill over to gold. And the problem with the gold market breaking, when I say break, I'm talking about contracts basically going to zero and physical being not obtainable. The problem with that is gold is a thermometer, barometer, whatever you want to call it. Much, much higher prices means that confidence has or is breaking. And the entire Western world's financial system runs on confidence. 100 years ago of gold, or an ounce today, or an ounce 100 years from now, is still just an ounce of gold. It doesn't change at all. The only thing that changes is the measuring stick, and that measuring stick are currencies. And currencies worldwide are going down because gold has broken a new highs in all currencies. Matter of fact, the dollar from $35 in 1971 to $3,500 plus now, that's over a 99% drop in purchasing power. And that's happening with other currencies. And we could 100 years ago of gold, or an ounce today, or an ounce 100 years from now. What you need to understand is that the entire world, whether it be financial markets or the real economy, everything runs on credit. And if credit becomes more expensive because it is being shunned by foreigners, how does the U.S. How does the U.S. fund a $2 trillion deficit? That's an extra $2 trillion every year that they have to borrow. And the answer ultimately is the Federal Reserve will buy those bonds, but that is outright and direct monetization. The problem that the West is in right now is it's a debt trap. I mean, in the U.S. we're paying $1.5 trillion in interest alone. You've got problems in France. You've got problems all over the world with sovereign debt. There's too much of it. How do you service it? That's why they're desperate to get yields down. But Mother Nature, market, is pushing rates higher. And that's where rates should go because there's more and more risk. There's little to no risk premium in sovereign bond yields across the globe.
And so essentially, I mean, the way that just so subscribers understand what we're talking about, so yield curve control is essentially going to flood the market with cheap money, isn't it? And so what's your hedge? What's your hedge? Global central bank gold buying is going to certainly be incentivized. What's the hedge for most people?
Yeah, well, the obvious hedge is gold and silver, and the reason being, gold nor silver can bankrupt. They are money themselves. They cannot bankrupt in a world that is bankrupting. I think your comment, the gloves are off. I think that's up until this point. I mean, it would be extremely easy to break the Western financial system with $5 or $10 billion. I mean, if you went into COMEX and LBMA and said, "Here's $10 billion. I want metal," it'd be over. There's no way to deliver that kind of metal short term. So it would break the markets. In the past, I want to say that Russia, China, the rest of the world were being polite because they didn't want bombs raining down on them. One of the big things, the reason the dollar has been the reserve currency for so long is the U.S. military. Basically, we forced the world with threat of the U.S. military. If you don't use dollars, I mean, look at Saddam Hussein. Look at Gaddafi. They both talked about, 15, 20 years ago about doing a gold-backed currency. And what happened? They were killed. In the past, countries have seen, those two examples, Gaddafi and Saddam Hussein. They saw those examples and said, well, yeah, we'll just buy it quietly. And now that the war of words is on, it would not surprise me to see either a country or countries together step up. And the Achilles heel to the Western system is the fractional reserve nature of the entire system. But the way to expose that is just create a failure to deliver in either silver or gold, and it'll be both within 24 hours. If either goes, the other's going to go within virtually immediately. So they're at the point now, like you said, the gloves are off, and money is just flowing into, whether it be the physical metal itself or even the leveraged contracts in the West. You're seeing foreign nations buy.
Looking at Goldman, Financial Times, I think today, on the 2nd or the 3rd today, they published something from Goldman's desk. And Goldman says, hey, clearly there's a lot of unreported buying. So while the World Gold Council show that acceleration of demand, they then show a red dotted line that says, oh no, there's a hell of a lot of unreported gold. And essentially then we speak to our liquidity providers, who one of them is a Goldman guy, and he says, oh no, it looks like, what they're saying is officially it looks like unreported is probably around about 33,000 tons. But he said more realistically, we think it's 42,000 tons. So, so much is going on under the radar here. And that's probably because a lot of, when you think about the gold that's flowing into China, gold and silver flowing into China, it goes through 42 customs districts, which have 680 individual customs offices. There's so much fiddle room here. It's unbelievable. And of course, we've known for years, people look the other way. It's probably very likely, and the feedback we get, this is military. This is to stock up military critical assets. Gold and silver are critical minerals.
Market veteran Bill Holter goes even further. He believes the fuse has already been lit, and silver will be the spark that ignites the entire financial powder keg. According to Holter, silver supplies have been in deficit for 5 years, and the U.S. has now officially reclassified it as a critical mineral, alongside its military importance. That's right, Washington itself is stockpiling silver even as public inventories vanish. Holter warns that a failure to deliver in the silver market could occur within months, triggering a cascade that forces gold and silver prices into unpriceable territory. In his words, when confidence breaks, the entire Western financial system goes with it. The timing couldn't be worse. Central banks are cutting interest rates again, trying to stabilize economies already drowning in debt. But this time, the bond market isn't cooperating. Yields are rising even as the Fed cuts, a clear sign that investors no longer believe in the system's credibility. A loss of control over the yield curve could shatter confidence in U.S. Treasuries, the foundation of all global finance. Holter calls it the mother of all margin calls. If credit freezes, markets could shut down in a matter of days, leaving savers and investors locked out of their funds. And as faith in paper assets fades, nations are quietly turning to hard money. China's yuan is now effectively exchangeable for gold, and central banks around the world are buying record amounts of bullion, much of it unreported. The West, meanwhile, continues to debase its currencies, while media headlines distract with celebrity gossip and partisan politics. But behind the noise, the monetary order is shifting from a dollar-dominated world to a multipolar gold-backed system. For those paying attention, it's a historic transfer of wealth, And those who act early could be the ones who come out on top when the
Let's get
dust
this
settles.
COMEX
Let's get into the
market up and
remaining
running
clips of the
in, I think it
interview.
was 1974 when it actually was plugged in. Gold was plugged into the existing COMEX at the time, which I think COMEX has been running since the 30s. But they clearly said what we'll do is we'll introduce volatility, we'll make it very unattractive, and this where we've kind of come to the point now. What you're just saying here, essentially, there's nothing in there they've got no control. They're losing that one tool they had.
Yeah, and that one tool, COMEX futures, let's just use the word derivatives. They were able to bully the price of gold, bully the price of silver downward, while bullying or helping the prices of assets that they wanted higher, like bonds and stocks. They could bully those higher. The problem is, well, first off, let me just go back and say that I believe, and I think, tell me if you disagree or not, I believe that the contracts were originally issued, as you mentioned, to increase volatility, scare people, but also as if you want to call it a pressure relief valve on the buying of physical gold and silver. I said the same thing when GLD and SLV were created. I viewed those as pressure relief valves. I mean, they don't have to own any physical metal. They can have all contracts. And I'm going to go one step further, and don't know whether you'll agree or disagree, but I believe that the crypto market was created as a pressure relief valve from gold and silver because they are viewed as an alternative, a dollar/currency alternative.
But silver's got my attention at the moment, and because you and I always have talked about silver. You've been so far ahead of the curve on silver, and I think it's now being by the US now suddenly naming it as a critical mineral. To me, that would mean that they're caught in a rock and a hard place here, because that means that US mined silver, that they probably start banning the sale of it. It has to be bought internally, perhaps. I don't know. What's your thoughts? Because to me, why would you allow a critical mineral to be sold?
Right. Well, I mean, look at it this way. Naming it as a strategic mineral or strategic metal automatically creates the demand of whatever the government's going to buy. And it automatically reduces the supply available to the market because that supply is being bought up by the government. So you've already got a disastrous supply-demand equation. They just poured gasoline on that fire.
Yeah, and of course, what you essentially we're saying here is that every other central bank, every other sovereign, everyone else is going to say, well, I'm not selling my silver at this price. I want a much higher price, and I don't quite know what that is yet.
The much higher price, I made the comment before we started recording, be careful what you wish for.
Yes, yes.
When we go through $50, and that's if markets stay open. I mean, there could be a failure to deliver, this month. I mean, who knows? But once we get through $50, you've got people talking $100, $200, $600 silver. There's really, in today's world, there is no way to project a number that gold or silver can go to. And I mean, the reason being, the parameters are zero and infinity. And the reason infinity is a parameter is because if a currency goes to zero, then it is priced at infinity in that currency. In other words, no amount of currency can buy an ounce of gold. That currency won't be accepted. And that's where we're headed on a global basis. I mean, if you think that the US dollar can collapse, crack up, and the system remain running, that's not going to happen. It can't happen.
Yeah, I think this is, that's something I think when we first...
It's a giant margin call.
Yeah.
This is a giant margin call that we're looking at. It's the margin call. It's the mother of all margin calls because the entire system is going to be called.
About this once before, Bill, and it really interested me, and it interested a lot of my friends and subscribers. I know that you have taken responsibility for yourself a long, long time ago, and you've moved yourself into a self-sustaining environment where, if you had to, you could hunt your food, you could provide your own power, water, etc., etc. And that is obviously the ultimate position. As you say, no matter how much gold and silver you got, if it's going to be difficult anyway. So you need food, but I think silver would, for the people that can't, who are stuck in a town, for example, obviously we suggest to them, look, at least get out of these worthless $0, or what will ultimately be a $0, into maybe some silver coins. And at least even if you haven't got a lot of spare money, at least to diversify into gold and silver. So for those people living in a town that can't do what you can do, and obviously I would recommend people try and contact you and find out how they may do that. But what should they be doing, Bill? Because they'll be looking at this thinking, yeah, what do I do?
I believe that your current location is more important. I mean, obviously having some metal outside of the system, that's a must. Otherwise you have no money. Because when this goes down, the wealth accrual into gold and silver will be beyond what anybody, including you or I, suspect is coming. I think it's going to be far larger. But I think your location is the most important. You can't use your gold and silver if you're dead. And if you live in a city right now and the system goes down, you're dead. If you don't have a place outside of the city where you can, let's use the word hide, pull a rock over the hole and wait for the storm to clear. If you're in a city, you're dead. There's no way to defend yourself. Suburbs, it'll get there, pretty quickly. But out in the country, I mean, if you are remote, and you've done some things such as, power source, a water source, food sources, food stocked up, and a way to defend that position, you're going to last an awful lot longer, and you may make it all the way through to the other side, however long that takes. But I think your location, at this point, is the most critical decision for people to make at this point.
I think people should check out, and we should all take responsibility for ourselves. If you're unable to make the kind of move that you have done, Bill, I have heard of these organizations where, as you say, like-minded people have set up funded community where essentially everyone takes responsibility for themselves. They're armed, you've got food, you've got a basically somewhere where you can actually serve each other and put a ring fence about yourself. So people should do their own research on that, because I know it's there.
So here's the bottom line. The cracks are already visible, and the house of cards, the financial system is built on, could collapse at any moment. As Andrew Maguire and Bill Holter both warn, this is not a time to be complacent. It's a time to prepare, to protect, and to position yourself before the reset becomes reality. Because once the system breaks, it won't matter how much cash you have in the bank. It's what you own outside the system that will decide your future. If you found this analysis helpful, don't forget to like, share, and subscribe. Also leave a comment. We read everyone. And check out our next report for strategies to survive the coming financial storm. Stay informed.